Welcome to the program.
Thank you. My name is Anthony Diazdi. I'm a partner at Diazdi Ching and Liu. I focus my practice on tax compliance, advice on cross-border work or cross-border transactions, and also handle a number of controversies, mostly tax controversies. So today we're going to be discussing a number of forms for the Form 5471. And I think it's a good idea for us to kind of first discuss some terminology, and then we're going to discuss the following requirements before we kind of dive into the schedules itself. I think it's a good place for us to start. All right, so real quick, what is the Form 5471? It's a form used by U.S. persons who are officers, directors, or shareholders with respect to foreign entities that are classified as U.S. corporations for U.S. tax purposes, or should I say, classified as foreign corporations for U.S. tax purposes. Excuse me. Who must complete the Form 5471? Well, the Form 5471, who has to complete it depends on whether or not you can be classified as a certain category filer. There are 5 general categories for the Form 5471, and then within those 5 categories there are 6 subcategories, and if you fall within one of those categories, then you have a requirement to file a Form 5471. Depending on what category filer you are, that will kind of dictate what schedules you have to go ahead and prepare, or should I say attach that Form 5471. All right. Who has to file the Form 5471? Only U.S. persons have to file the Form 5471. That's typically a U.S. citizen, U.S. resident, domestic partnership, domestic corporation, domestic trust, or a state. Sometimes a tax-exempt entity will have a Form 5471 filing obligation. And also, what is important for Form 5471 preparation purposes is to define the term U.S. shareholder. You need to understand that term in order to basically complete the Form 5471. Basically, a U.S. shareholder is a U.S. citizen, resident alien, U.S. corporation, U.S. partnership, trust, basically that owns directly or indirectly, constructively, at least 10% or more ownership in a foreign corporation. That could be by value or by vote. Okay, another important term is CFC, which is a controlled foreign corporation. That's very important for purposes of completing the Form 5471. A foreign corporation is a controlled foreign corporation, or a CFC, if any day during the year the foreign corporation you had U.S. shareholders who held more than 50% of the combined voting power or the total value of the foreign corporation. All right. Another term that is necessary to understand in order to prepare the Form 5471 is specific foreign corporation, or SFC, and that is basically an SFC is a foreign corporation that is either a CFC or has at least one U.S. shareholder that is a corporation. Okay, so let's go real quick through the filing categories. All right, a Category 1 filer is a U.S. shareholder of an SFC at any time during the year who owned stock at the last day of the year that the company itself can be classified as a SFC. All right. Category 1 was also broken down to Category 1A, 1B, and 1C filers. That was recently expanded by the IRS. And 1A is a so-called catch-all category, where basically it includes anybody who is a Category 1 filer. A Category 1B filer is a U.S. shareholder that owns stock in a foreign corporation directly or indirectly. but the shareholder is unrelated to the corporation within the meaning of Section 954 D3. And then Category 1C filer is a U.S. shareholder of a foreign corporation only because of constructive ownership from a foreign corporation. All right. Category 2 filer. Category 2 filer is a U.S. person who is a officer or director of a foreign corporation, and if there's a substantial change in the U.S. ownership of the foreign corporation. So then that will typically involve when a U.S. person acquires at least 10% ownership or an additional 10% ownership in the foreign corporation. So understand that you could have a Category 2 filing requirement and have to file the Form 5472 even if it's not a CFC. You don't have to be a CFC to have a Category 2 filing requirement. Okay, moving on real quick. A Category 3 filer is a U.S. person. If the U.S. person does any one of the following: acquire stock in the corporation, which is then added to the stock of already owned corporation, a foreign corporation, which meets the threshold category of a Category 2 filer, which is a 10% stock ownership requirement. The U.S. person acquires an additional 10% ownership in the foreign corporation. The U.S. person becomes a U.S. person within the meaning of a 10% ownership, or disposes of 10% of the shares, or meets a 10% threshold requirement to file a Form 5471. Moving on real fast, a Category 4 filer is a U.S. person who basically controls the foreign corporation. For purposes of control, that is defined as the individual owning 50% or more of the combined voting power or value of the foreign corporation. And then there's a Category 5 filer. A Category 5 filer is a U.S. is a person who is a U.S. shareholder of a CFC at any time during the CFC's taxable year and owns stock in the foreign corporation on the last day in the year on which the corporation is a CFC. Okay, and then like Category 1, Category 5 is broken down into 5 subcategories: Category 5A, Category 5B, and Category 5C. A Category 5A filer is a so-called catch-all, just like a Category 1A filer. A Category B filer is basically an unrelated party or a U.S. shareholder who would not ordinarily control 50% or more of a foreign corporation, but does so through a foreign corporation or another entity. And a Category 5C filer is a related who winds up becoming a related, just say he basically winds up holding an interest in a foreign corporation through an entity itself, other than basically holds as a result of the downward attribution rules in Code Section 958. So that's going to be your Category 5C filer. All right. Why does this all matter? It all matters, as I mentioned before, because what category filer you are determines what schedule you have to file. For Schedule J, a 1A, a 4, a 5A, a 5B, and a 5C filer have to file the Schedule J. A Schedule P, a Category 1A, 1B, 4, Category 4, 5A, and 5B filer has to file a Schedule P. Schedule H, Category 4, and Category 5A filers have to file the Schedule H. Schedule E, Category 1A, 1B, 1C, Category 4, 5A, 5B, and 5C have to file the Schedule E. And then for Schedule E1, Category 1A, 1B, 4, 5A, and 5B filers have to file the Schedule E1. Okay, so let's move on now to the Schedule E. What is the Schedule E? The Schedule E, and we'll talk about soon as well, the Schedule E1, is used to track the E&P associated with foreign tax credits. Looking at the Schedule E, let's start off with lines A and B of the schedule. And basically what line A asks of you to do, it basically asks what category of income is going to be reported on the Schedule E. And the categories of income you're going to find on IRS Form 1118, and the Form 1118 discusses the various categories of income, and as well as the code for each category of income. So the first step when you're preparing the Schedule E is to determine the type of income that's going to be reported on the Schedule E, and that's basically going to be foreign branch income, passive income, Section 901J income, income resource by treaty, and your general category income. On the slides I have basically the codes for each category of income, and on the slides itself I also provide a definition for each category of income. So you start off the Schedule E on A, entering the code for the income that's reported on your Schedule E, all right? For Schedule B, that basically asks you to state the country code if you're dealing with the country code that you're dealing with, and also if you're dealing with a sanctioned country itself. You're supposed to also go ahead and add in the code, which is you'll find in the instructions itself on line B. Line C is for RBT code, which should also be entered on line C. All right. Let's move on now to Part 1 of Schedule E. Okay, and Part 1 of Schedule E is used to report taxes for which foreign tax credits are allowed. So basically, when you're dealing with Part 1, it's designed to report any foreign taxes paid or accrued by the foreign corporation or CFC. The filer must not only disclose the amount of foreign taxes paid by the CFC, but the filer must also properly convert the foreign taxes paid to in US dollars. So let's go through the columns here. So column A asks the filer to list the name of the foreign corporation or pass-through entity that paid the foreign tax. Column B asks the filer to enter the employer identification number, EIN number, or reference EIN number for the payer of the foreign tax. Column C asks the filer to enter the 2-letter codes of the foreign country which the taxes were paid. Basically, the country codes are available on irs.gov if you have a difficult time finding, or if you don't know the country code itself. Column D asks the filer to disclose any tax accounting timing discrepancies between the U.S. and the foreign country for the tax years at issue. Sometimes you're going to have a situation where the foreign tax year under the foreign law may not be the same as the U.S. tax year for the foreign corporation. So if you wind up having a discrepancy, you're going to wind up reporting that under column D. Under column E for Part 1, it asks the filer to disclose the U.S. tax year of the foreign corporation which the tax relates. Column F asks the filer to enter the income subject to tax in the foreign jurisdiction of the corporation. Column G asks the filer to check the applicable box if the taxes were paid on U.S. sources of income. And column H asks the filer to enter the code of the country which the local taxes were paid. Column I asks the filer to enter the tax paid or accrued in the local currency in which the tax is payable and not the functional currency of the CFC. Internal Revenue Code section 985 B1A generally states that the functional currency, if you know what that is, will be the US dollar if we don't have another functional currency utilized by the CFC. All right. For columns G, J and K, it asks the filer to enter the exchange rate on column J, translated, and the translation into US dollars would be reported on column K. All right. Let's now move on to column L. Column L asks the filer to enter the foreign tax in functional currency. As I stated before, the general rule of thumb is the functional currency is the US dollar. However, if the books and records of the foreign corporation are contained or are utilized in a foreign currency, in that case, the functional currency of the foreign corporation or the CFC would be a foreign currency, and then you would wind up disclosing that on column L. All right. So let's now move on to real quick. I think we can now move on to section 2. I think that's enough for part 1. So for section 2, this discusses taxes that are deemed paid according to Internal Revenue Code section 960B. So basically, the purpose of section 2 is to track deemed foreign income taxes with respect to the current year PTIP distributions from a lower tier foreign corporation to the CFC. Okay, so for column A asks the filer to list the name of the related foreign corporation or pass-through entity. Column B asks the filer to enter the EIN or reference ID number of the payer of the foreign tax. Column C asks the filer to enter a 2-letter code for the foreign country where the tax were paid. Column D asks the filer to disclose the applicable PTIP group with the associated foreign taxes that were paid. I'm going to be talking about PTIPs in a minute, but in general, what I've included in the slides is the categories of PTIPs that may wind up occurring in this situation, and what may wind up having to be disclosed on column B for part 2. Okay. Column E asks the filer to include income from any lower tier corporation under section 951A or 951 Cap A from established PTIPs accounts, and this is basically going to be your subpart F income or GILTI PTIP accounts, and like I said, we'll be discussing that in a minute. Column F asks the preparer to state in functional currency the PTIP described from the lower tier foreign corporation. Column G asks the filer to state in functional currency the total amount of PTIP in the PTIP account which a distribution was made. Column H asks the filer to state the local amount of PTIP group taxes with respect to the PTIP groups in US dollars. Column H, basically the filer should enter the lower tiered foreign corporation PTIP group taxes with respect to the PTIP within the annual PTIP account identified in columns A through E. This amount should be entered in US dollars. Column I, the preparer should enter in US dollars the amount and the recipient of foreign income taxes deemed paid that are properly attributable to the PTIP distribution in column F and that have not been paid by the domestic corporation for any prior year. Okay. The next, let's move on to the next part of the Schedule E, and that's going to be Part 2 election. So the Part 2 election asks if a Section 986A1D has been made to translate taxes using the exchange rate on the date of payment. Just as a background, the 2004 Jobs Act added this new election, and basically it allows taxpayers to translate foreign taxes into US dollars using the average exchange rate for the year. The provision allows taxpayers to elect the time the foreign tax were paid instead of the average for the year as well. So basically, some consideration must be made on the exchange rate or whether or not to make the 986 A1D election, because once it is made, it becomes binding, and that election itself is binding to the next year as well. All right. Let's move on now to Part 3 of the Schedule E. And Part D asks the filer to report foreign taxes of the CFC that were paid but for which no foreign tax credits were allowed. This could be a situation where you're dealing with, an anti-splitter rule. You're dealing with when you're a hybrid instrument or an anti-hybrid, or should I say reverse hybrid type of situation. So, this is where Part 3 would wind up applying. All right. Let's now move on to Schedule E1. Schedule E1 is probably the most convoluted and the most difficult part of the Schedule E. And what the Schedule E1 is used for, it's used to track basically taxes accrued and paid for foreign corporations. And as mentioned before, PTIPs, this is where you're going to be basically disclosing your PTIPs. Okay, so just as way of background, why is this important? Because your PTIPs basically determine what foreign taxes are credible, and you start off first before you actually go ahead and you start preparing your Schedule E1, looking at Code Section 904B. Code Section 904B, how it winds up acting is you wind up basically basketing your different categories of income. So you have different categories of income that are placed in different baskets. For example, if you're dealing with Subpart F income, that goes into one type of basket. If you're dealing with GILTI income, that goes in another type of basket. Or you're dealing with 965, the transition tax PTIP, that also goes into a different basket. And the importance of the baskets itself is that you can't basically cross deduct, or you can't cross-reference one type of income with another, all right? So what that means, you can't basically offset income in one basket for another, all right? So there is baskets for passive income, GILTI, foreign branch income, and there's basically a catch-all basket for business income as well. And you just got to start off by allocating the income itself to each basket, okay? Now, where the E&P of a CFC consists in whole or in part of previously taxed earnings and profits, special rules apply under Code Section 959, which determine the ordering and taxation of the distributions of such PTIP. Amounts included in gross income of a U.S. shareholder, such as GILTI or Subpart F income, are not included in gross income again, and such amounts are distributed through basically directly or indirectly through a share of ownership. So basically the purpose of the PTIP rules itself is, one, to determine the credibility of foreign taxes, and then two, so you don't have a situation where the same income is taxed twice. Okay, so at the very basic level itself, PTIP distributions are generally allocated in the following order, all right? There's a PTIP that's attributable to investments in U.S. property under Code Section 959C1. And then two, there is a PTIP attributable to Subpart F income under Code Section 959C2. And then there's your three, your general and current accumulated E&P under Code Section 959C3. For 959 purposes, a distribution generally attributable to the E&P is accorded first in and first out methods, which is LIFO, all right? So when the Tax Cuts and Jobs Act took place, there was some confusion because what ended up happening, there was proposed regulations issued. There was also notice 2019-1 issued, which basically abrogated these rules, and they've added different categories of PTIPs and made things kind of more complicated. Then later on, the final regulations were issued under Code Section 960B. These rules are kind of complicated, but I think for our purposes to kind of simplify it, the way we have to kind of look at how the PTIP works for Schedule E1, it basically requires the preparer to basically make an allocation or PTIP attribution to Section 965A inclusions, which is going to be your transition tax, any PTIP that's basically associated with that. 965B, which is deficit offsets. Section 956, investments in U.S. property. GILTI inclusions and Subpart F inclusions. And then basically you'll have two final PTIPs, one which be for your Section 245A, hybrid dividends. And then you'll have your Section 1248 PTIP, which is basically associated with any type of retained earnings that are going to be built into your stocks, your PTIP shares, or should I say your CFC shares. All right, so with this in mind, let's start going through Schedule E1. Let's start going through the columns itself, and let's see how these rules work and how we go ahead and make allocations of each category of PTIP for each line here or each column here of the Schedule E. All right, so let's start off first with column A, B, and C. And basically for columns A, B, and C of Schedule E1, this is where the filer would report foreign income taxes and corporations paid or accrued, which is attributable to Subpart F income, tested income, or residual group, respectively. All right. For your column D, this is where your filer is going to go ahead and report any taxes that are suspended under Code Section 909. Under Code Section 909, a foreign tax credit is suspended if it hasn't been accrued for purposes of U.S. taxes. This is a situation where you have like a foreign tax credit splitting event. But this type of situation can wind up happening where you have disregarded payments, transfer pricing adjustments, contributions of property that results in shifting of deductions and timing differences between U.S. and foreign law. So any Section 901 suspended taxes should be reported under this column. All right. Then let's now move on to column 1. For column 1, which is Roman numeral I, the filer uses this to report previously taxed income that's reclassified as Section 965A PTIP under 959C1A as investments in U.S. property. This is situations where, you basically, this is when you have income that is from accumulations of post-1986 income that is reclassified. So this is where you're going to wind up reporting under column 1. So under column 2, let's move on to that. A filer uses column 2 to report previously taxed income reclassified as Section 965B under Section 959C1A, which is reclassified as investments in U.S. property. Let's move on to column 3. Column 3, a CFC shareholder will use column 3 to report general 959C1 PTIPs attributable to U.S. property and reclassified as investments in U.S. property. For column 4, a CFC shareholder will use column 4 to report PTIP that's originally attributable to inclusions under section 951A, cap A, guilty, or guilty that was reclassified as investments in U.S. property under section 959C1A. We'll use column 5, we'll move on to that now. Column 5, a CFC shareholder will report PTIPs attributable to 3 subgroups, all right? So basically, if you have one of these 3 PTIP subgroups that fall under section 959C1A, this is where you'd wind up reporting it. And that's PTIP that's attributable to a hybrid dividend under code section 245E2, that's reclassified as U.S. investments in property. If you have a PTIP that's attributed to code section 1248 under code section 959E, so basically under code section 1248A, any kind of gain recognized on U.S. shareholders' disposition of CFC stock in which there is a deferral of E&P, you'd wind up reporting that under column 5. And then also if there's a PTIP that's attributable to 1248 amounts that is from the gain or sale of a CFC by a CFC. So under the rules of 1248, which is treats the recognition of deferred income differently than if you had an individual. So you basically there's a ceiling on how this can be taxed. So you'd wind up reporting your any types of deferred income, although not subject probably to tax in the U.S. Because they're deemed the way that the Internal Revenue Code works. You'd wind up reporting that under column 5. So let's move on to column 6. A filer will use column 6 to report PTIPs attributable to 965 classified under section 959C2, attributable to 951 or 951 cap A. For column 7, a filer will use column 7 to report PTIPs attributable to 965B4A, classified under section 959C2. Let's move on to column 8. A filer will use column 8 to report PTIPs attributable to 965B4A, classified as 959C2, which is attributable to 951 or 951 cap A. Column 8 will apply if a U.S. shareholder owned multiple CFCs prior to 2018, and some of the CFCs had positive E&P and others had negative E&P. All right, for column 9, a filer will use column 9 to report PTIPs attributable to section 959A, classified under code section 959C2. Basically, this represents any PTIPs that's related to just pure guilty inclusions. Column 10, a filer will use column 10 to report PTIPs attributable to 245 cap A D, classified under section 959C2. This type of PTIP is created when a CFC is owned by a domestic corporation and the CFC receives a hybrid dividend from another CFC. Okay, let's now move on to column 11. A filer will use column 11 to report PTIPs attributable to 951A1A or subpart F income. Okay, now since we've gone through the columns for Schedule E1, let's go through the lines real quick. So for line 1A asks the filer to enter the balances for each column at the beginning of the year. This amount should equal the balances ending at the prior year's Schedule E1. Line 1B states if there's a difference between last year's ending balance on Schedule E1 and this year's. There should be an explanation made as to why there's a difference, and maybe an attachment should be done. So line 2 would use to reflect any adjustments to a U.S. person's foreign tax credits as a result of determining foreign taxable income. If a U.S. person has amended a prior year return, this is basically where you'd probably wind up making an adjustment on Schedule E1. I'm sorry, it's line 2 of E1. And line 3A, you basically would include columns A, B, C, and E during the year that were suspended as a result of Section 909 and that were unsuspended. And you'd basically wind up reporting any amounts of foreign income taxes that were previously suspended under Code Section 909, but became unsuspended during the taxable year. Line 3B includes the positive amounts of column D. The foreign taxes relate to the current year that were suspended due to the rules of Section 909. Okay, line 4. This is the total amount reported on line 4 should be taken from Schedule E, Part 1, line 5, column K. Line 5 should report foreign taxes carried over from a surviving corporation after an acquisition of a foreign corporation assets by another corporation through an acquisition or a merger. For line 6, the filer should report any taxes reported on Schedule E, Part 1, Section 2, line 5. Line 7, the filer should attach a statement with a description and any amount of any adjustments required before taking into account taxes deemed paid by a foreign corporation. Line 8, the filer should report any paid or accrued taxes on current income or accumulated E&P. Line 9, the filer should report taxes deemed paid with respect to inclusions under Code Section 951A. Line 10, the filer should report taxes deemed paid with respect to any actual distributions based on E&P. Line 11, the filer should report foreign taxes reclassified from Section 959C2, previously tax E&P, to Section 959C1, previously tax E&P. These amounts should be reported as negative numbers. For line 12, the filer should attach a statement with a description of any adjustments required before taking into account taxes paid by the foreign corporation. And line 13, the filer should enter the balances of the paid accrued taxes or amounts for lines 8 through 12. Okay, let's now move on to Schedule H. Okay, so Schedule H is used to report a CFC's current E&P. So let's start off first with lines 1 through 5C. So for lines 1 through 5C, entries must be made in the functional currency of the foreign corporation. So if the basic fallback would be the dollar, but if the books and records and the economic environment of the CFC was in a foreign currency, that would be the functional currency. So lines 1 through 5C are once again entered in the functional currency of the CFC. All right. But real quick, let's go through those lines. So line 1, you must enter the CFC's net income or losses per the foreign books and records, or the E&P of the foreign corporation. For line 2, for lines 2A through I, you should enter any adjustments to the foreign corporation's E&P. So for line 2A, any adjustments made from the current E&P that is a result of capital gains or losses should be entered. For line B and C, you should enter any adjustments to the CFC's current E&P as a result of depreciation and amortization. For line 2D, you should enter any adjustments made to the CFC's current E&P as a result of investment or incentive allowances. For line 2E, you should enter any adjustments made to the CFC's current E&P as a result of changes to the statutory reserves of the company. Now, this is going to be a situation where very few of us would wind up making any entries, because this particular applies to E&P for insurance companies and captive insurance companies. So unless you're dealing with an insurance company or a captive insurance company, you're not going to have to make any changes to the statutory reserves. Okay, for line 2F, you should enter any adjustments taking into account the rules of Code Section 471. And this is basically adjustments made as a result of inventory. There are some special rules which apply to Code Section 471, depending on the gross receipts of the entity itself. But basically, any inventory adjustments itself for the foreign corporation would be entered onto line 2F. All right. For line 2G, this is where you're going to enter any adjustments to the CFC's E&P for income taxes. The entry on line 2G should reflect the differences between the income tax expenses reported on the books and the income taxes deducted or added to the E&P. Such differences include deferred income tax expenses, uncertain tax positions, or basic adjustments made to closing financial statements. Okay, for line 2H, you should enter any adjustments to the CFC's E&P, which basically reflects any kind of foreign currency gains or losses. Most of these types of transactions, when you're dealing with foreign currency gains or losses, are going to be governed by Internal Revenue Code Section 988 for reference. And then for line 2I, this is other, you should make any types of entry for changes to the E&P that is not reflected in lines 2A through 2H. If necessary, you should attach have an attachment to the Schedule H to reflect any types of adjustments. Okay, so for line 3, basically should include any types of additions to the net income or the schedule. For line 4, any types of subtractions from the schedule should be entered onto line 4, and then for line 5A, you'd go ahead and add in and subtract lines 1 through 3 minus lines 4, and then you'd wind up coming up with your final number. So for line 5B, this is going to be if you're dealing with a DASTM entity. This slide itself kind of goes over what a DASTM entity is and how it's determined. But if you're dealing with a DASTM entity itself, you're going to go ahead and make the entry onto line 5B. Then for line 5C, you're going to go ahead and combine lines 5A and 5B. And then for line 5D, you're going to enter in functional currency the average exchange rate for the CFC for the tax year. And then line 5E, you're going to go ahead and report the exchange rate using the divide by convention method specified in the instructions in Form 5471. Okay, so I'm now going to go ahead and pass the presentation on now to Allison.